the group account. This is advanced financial reporting and analysis. So today we're going to do on the group account. We don't know what people develop on a group account. Niwape assignment, niambieni assignment ni wapi tuanzie hapo. Out of the assignment that is given, manage it FT, sorry. Ndio. We do the last sitting question for December 2024. Question number 2. Do that. December. So we do December 2024. Question number 2. December 2024. No, December 2024. We do question number 2. We're given that H Limited, a public limited company, which operates in the manufacturing sector, has made investment in other companies following draft statement of profit or loss and other comprehensive income. The year ended 30th September 2024 relate to H Limited and its investment companies. Being given the revenue, cost of sales, gross profit, and other incomes, you have the distribution costs, the admin expenses, other expenses. You have the operating profits, you have the finance costs, finance income, profit before tax, we have the profit, the income tax and profit for the year. The gain on property valuation, we have the total comprehensive income. Additional information is that H Limited had acquired 25% interest in R Limited several years ago for a cash consideration of 1,800 million, when the retained earnings of R Limited stood at 2040 million, and there are no other reserves. Even on 1st April 2024, H Limited acquired a further 50% equity shareholding in R Limited for a consideration of 3,500 million. Given the retained earnings of R Limited as at 1st October 2023, amounted to 3940 million. Regional cost 25% of the net assets. Original 25% interest in R Limited was considered to be fairly valued at the equity accounted value as at 1st April 2024. Given the fair value of net assets of R Limited, fair value of the net assets of R Limited, the net assets of R Limited, which approximated their carrying amount, were 4,900 million. Given also that it was 4,900 million as at 1st April 2024. H Limited, we've been given that had also acquired 80% of 500 million equity shares in Samba Limited on 1st October 2022. You've been given that H Limit, this acquisition involved a consideration of 2,300 and a share exchange on the basis of 2 shares in H Limited for every 3 shares in S Limited. Market price of one H Limited share at 1st October 2022 was shillings 15 per share. The carrying amount of net assets of S Limited at acquisition date was 5,100 million. But the fair value of net assets at 1st October 2022 was 5,300 million. Fair value increase was due to an unrecognized customer list, which had an remaining economic useful life of 5 years at the date of acquisition. Group policy is to measure and control in interest at fair value at the date of acquisition. Fair value of the non-controlling interest in S Limited was 800 million, and also Unlimited was 540 at the respective dates of acquisition. Assume that all incomes, expenses, gains, and losses accrue evenly throughout the year. No impairment on goodwill was reported during the year ended 30th September 2024. You are required, you determine the goodwill arising on acquisition of S Limited and Unlimited, and also they want the consolidated statement of comprehensive income and the statement of profit or loss and other comprehensive income, and this is for the year ended 30th September 2024. Sasa hiyo ndo swali. So where do we begin? First is now on determining the goodwill on what? Goodwill on acquisition of. Goodwill on acquisition. Now this is as per the requirement of IFRS 3. Whenever a company in this case is acquired, the goodwill on acquisition of that company need to be determined. And the determinant of the goodwill here is on how we determine the method that we're going to use to determine the goodwill on acquisition. You know the method that we use to determine the goodwill on acquisition. Yes? Which is the method that we're going to use to determine the goodwill on acquisition? Are you aware that you are having the exam in 2 weeks' time? I must see 2 weeks. Fact, it is in how long? We have the 2 companies here. I have the S Limited, and I'll also have the H Limited. Shillings in millions. We have shillings in millions. Now, we're going to use what we call the full goodwill. Sorry. So we're going to just have the goodwill on acquisition. Where in this case, we're going to use what we call the full goodwill. I said whenever you are given the NCI at fair value, what we use is the full goodwill. So tuanzie hapa. Purchase consideration. What was the purchase consideration? And then the S Limited. S Limited had acquired 25%. Hapa ndo imeanza. Acha tuanze na R. There is R and S. We were told that he had acquired 25% of the equity interest. We can now continue. Now listen here. Unlimited was initially acquired, they acquired an associate, which was 25%. And when did they acquire this? It was acquired on 1st of April 20 what? Or several years ago. Right? Then They have also acquired another 50%. So ikakuja ngapi? 75%. Yeah. Right? So we just get the total purchase consideration, which in this case, at this time, it was how much? This will be 1,800. You acquired 2040. Is it 3,500? If you get the summation, how much is it giving you? How much is this case it acquired for that company? What is our total purchase consideration? Hapa inakupea ngapi? Ni mnataka nichukue kali. 53. Yeah. What about these other one? You acquire these at how much? Maybe 2,300. One. We're told that on H Limited, it also acquired 80% of 500 million equity shares in S Limited. This acquisition involved a cash consideration of 2.3 million and a share exchange on basis of 2 for 3 shares. So the shares here will be given by 500 multiply by 2 divided by 3. Inakupea ngapi? What is the total? Is the total of how much? $26? That it? At the NCI at fair value? What was the NCI at fair value? NCI at fair value, we were given an additional information number what? We were given on additional information number 3. This is 800. The other one here was how much? The other one here was 5 foot. Less the net assets acquired. What another? 18. Hivyo. Kwani ina reduce? Iko sawa hiyo. Kwaje? Oh, 2633. unaona venye tunafanya ni E multiply by 2 over B. We continue. What will be the net assets acquired? Net assets acquired, we begin with the ordinary shares. What was the ordinary share? Now, on additional information number 2, we can get there. Additional information number 2, we were given that carrying amount of net assets of S Limited at acquisition was 5,100. But the fair value of net assets at the 1st of October 2023 was 5,300. Hiyo ni ya S. So we have the net assets acquired here, which is 5,300. What about for R Limited? That is from additional information number 1. We were given that H Limited acquired further 50% equity holding in R Limited for a cash consideration of 3,500. 10 earnings of R Limited as at 1st October 2023 amounted to 3940. The original 25% in R of the net assets approximated R Limited, which approximated their carrying amount were 4,900 as at 1st April 2024. So here what we've been given is the net assets, which is 49. So get the goodwill. Niambie ni ngapi? Get the value of goodwill. Bei inakupea ngapi? Get the value of goodwill. Niambie inakupea ngapi? Huh? This is 940. The other one? 18 negative. 18. So that was a negative goodwill. Now, we were told that there was no impairment of the goodwill. We were told that the goodwill had not been impaired during the year. And that is it. 1,200 and the other one negative 2,100. Hiyo inatoka wapi? Huh? Kwa sawa hivyo? We continue. We continue. So I'll look for the revaluation here as for additional information number 2. We get the revaluation reserve, which will help us to know what we call the depreciation. Now, valuation reserve is the excess of the amount that we were given there. 5,300 you minus 5,100, which in this case it was how much? 200. So this is what will help us to determine the depreciation, which was for 5 years. So 200 divided by 5, what will be the depreciation? It will be how much? By the way, here there is a mistake I did. Sure. Now on this share exchange, this is how it should be. We were told that 2 for every 3, and the shares we had is 500. I've realized here we get in the number of shares, and I didn't multiply by the market value. The market value there was of 15. So it itakuwa 500. I divide by 3, I multiply by 2, then you multiply by 15. Hapo ndo siku multiply. So how much is it giving you? I didn't multiply by 15, the market value. Nakupea ngapi? 5,000. So this I could have added the 5,000. So just add the 5,000. This will be 80. Yeah, now from there we can get the goodwill. 73, sorry. They should be 73. Then we continue. Please now continue. So now, this one is giving you how much? Hamjaniambia. Huh? I have Japan. 2800. Now we continue. Consolidation analysis. Now this is just a statement of comprehensive income. All of them. We add S and what? S and R. When was S acquired? Acquired when? Or generally, when was it fully a subsidiary? And you look at the additional information, number one, the additional 50% was acquired when? 1st of October 2023, right? And our year ends when? That is September 2024. That means for R Limited, it existed as a subsidiary for the whole year. No. So I will consolidate for it the whole year. The other one is this other one for S Limited. When was it acquired? He acquired S Limited on 1st of October 2022. Yeah. Right? X Limited also acquired S Limited on 1st October 2022. So that means for this one existed as a subsidiary for the whole year. Sindio? Vizuri mnakubali tu zote. Unlimited, when was it acquired? When you look at the additional information number one, the 50% was acquired on April 20 what? 2020. And therefore, it exists as a subsidiary form and month. Anyway, go to endelea. This is the H group. Consolidated statement of profit, loss, and other comprehensive income. This is for the year ended when? For the year ended. It should be 30th September 2024. So shillings in millions. So we begin with the revenue. Revenue itakuwa ngapi? Revenue will be 6,200. You add S Limited, which is 2840. Then you'll also add 2120. Multiply by how much? 6 over 12. Here we didn't have any in the group cells. So it will give you how much? Let's the cost of sales, we also do the same. I said we only consolidate subsidiaries, and we consolidate subsidiaries for the time that they existed as subsidiaries. So this will be 2840 and 120 times 6 over 12. So this is how much? 10,100. Cost of sales we've also been given there. It was 4680. 680. You had this other one was of how much? 1640 plus this is 1180. multiply by 6 over 12, you add 40. 40 was the depreciation. This depreciation. So how much is it giving you? 4680 plus 1640, 1180. You multiply by 6 over 12 plus 40. This is 6950. Get the gross profit. Gross profit is 10,100. You minus 6950. This will be 3150. We continue. We continue. So we'll also have the other incomes. Other incomes. On other incomes, we have 315. You add, this is 105. You also add 60. 6 over 12. We give you how much? So how much is it giving you? 450. Less expenses. On the expenses, we have distribution cost. Distribution cost was of how much? 330 plus 165 plus. This other one is 180. 6 over 12. How much is it giving you? 330. This is 585. We also have admin expenses. Admin expenses. Admin expenses is 240 plus 140 plus 86 over 6 over 12. We give you how much? 240 plus 140, 86 over 12. Getting how much? 420. So out of that, we can now get the, we also have other expenses. Other expenses, we were given there 195, 120, then 60. This is 6 over 12. How much is it giving you? So this will be 195 plus 120 plus 60, 6 over 12. This is 345. So get the operating profits. Operating profits. Operating profit is 150 plus 450. 585, 420, 345. This is 2250. Less the less or was there an income? Yeah, we less the finance cost. Finance cost. Finance cost is just the interest expense, which in this case was of how much? Interest expense was of how much? This is 80 plus 65 plus this other one is 50 multiplied by 6 over 12. We give you how much? 80, 65 plus 25. This is 170. There is also what we call the finance income. Finance income. Finance income is 90 plus 70. Then you add 110, 6/12. Will be how much? 215. Get the profit before tax. Profit before. So 2250 plus 215, 170. This is 2295. Less you less the income tax. Income tax expense. Income tax expense will be 285 plus 145 plus. This other one is 146/12. So 285 plus 145, 146/12. This is 500. So what will be the profit after tax? Profit after tax require ngapi? 2295 you multiply by, you minus 500. It will be 1795. I will also add the share of associate profit. Share of associate profits. Now for the share of associate profits here, share of associate profit will be given by 25%. You just multiply by the profit for the year of Afra Limited. Then you multiply by 6/12. Remember, before Afra Limited was not a subsidiary. It initially existed as an associate for the first 6 months. So the profit for the 6 months is what we are looking for. So it is how much? 75. So 75. So get the total profits. Total profits. Within 70. Then we add the other comprehensive income. Other comprehensive income. Other comprehensive income here we have gain on property valuation. Gain on property valuation. So gain on property valuation here is 160 plus 150. 60 plus 50 plus 80. 6/12. This is 250. So you can now get the total comprehensive income. And the total comprehensive income, 1870 plus 250. This is 2120. And that is how we do the statement of comprehensive income. That is how we do the statement of comprehensive income. And also that is also how you are required to do that particular question. August 2024. Only go to question number 2. August 2024. Question number 2. August 2024. Question number 2. Pata Limited, a quoted which operates Pata Limited, we a quoted company which operates in the agriculture sector, has investment in a number of companies. Following financial information relates to Pata Limited and its investment companies. When the statement of profit or loss and comprehensive incomes, the year ended 30th June 2024. Additional information number 1. Given that on 1st July 2021, Pata Limited acquired 75% of the ordinary shares of Soma Limited for a consideration of 4,500, when retained earnings of Soma Limited stood at 2,100. At the date of acquisition, the fair value of identifiable net assets approximated their carrying value, with the exception of an item of land whose fair value exceeded its carrying amount by 600 million. Land had remained in economic useful life of 6 years at acquisition date. On January 2022, Pata entered into a joint arrangement with another entity to establish joint control over net assets and operations of Jana Limited. Given that Pata acquired 50% of the ordinary shares of Jana Limited for a consideration of 700 million, when the retained earnings of Jana Limited amounted to 1,300. You've been given that Pata Limited equity accounted for its share of interest in Jana Limited, in line with IAS 28 investment in associates and joint venture. 1st January 2024, Pata Limited acquired a 30% shareholding in Jana Limited for a consideration of 500 million. The fair value of original investment in Jana Limited at 1st January 2024 was 950. No fair value adjustment were necessary in respect of the identifiable net assets of Jana Limited. Given that the group policy is to mention and control an interest in a subsidiary, a proportionate share of the net asset at the date of acquisition. During the year ended 30th June 2024, Pata Limited sold goods to Soma Limited for 340 million fair value, and Pata Limited reported a loss of 55 on this transaction. Given that Soma Limited still had 1/2 of these goods in inventory at 30th June 2024. Impairment loss, we've been given there. Impairment review feels that goodwill has not suffered any impairment. All incomes and expenses and other group companies are deemed to accrue evenly throughout the year. You are to calculate the value of goodwill arising on acquisition, Soma Limited and Jana Limited. And then also you prepare consolidated or statement of financial position. So we can determine the goodwill on acquisition. The goodwill on acquisition. So these are two companies. We have the goodwill on acquisition of Soma Limited, and there is also Fojana Limited. Now that the goodwill is measured at proportionate share of the subsidiary's net assets, we're going to use what we call the partial goodwill. So what is our purchase consideration? This is the cost of investment. Purchase consideration we were given here. For Soma Limited, he acquired it at a consideration of 4500. For Jana Limited, it was acquired initially the 50%. He had acquired it for 700. Now kaongezea, he added. The other 50% was 700. Yeah. And then the 30% ilikuwa ya ngapi? 500. So this in total, it is 1200. Then from there, we less the net assets acquired. Net assets acquired. Net assets acquired, do we have the ordinary share capital? Yes. What was the ordinary share capital? Ordinary shares. Here is how much? Ordinary shares for Soma is 500. This is 300. Yeah. We don't have the share premium. We also have the pre-acquisition retained earnings. Pre-acquisition retained earnings here, it was, for this one was 2100. This other one was how much? They entered into a joint arrangement when the retained earnings were 1300. But for this other one is, 13. There is a revaluation here. The revaluation. Valuation here, it was of how much on additional information. Number one, it exceeded by 600. So you get the summation. Now here it was fair value of original investment as at 1st of January 2024. It amounted to how much? This is when they acquired these other 950. 950. They give you how much here? What is the total here? 500, you add 2100, you add 600. That it? He had acquired what percentage? This one was 75. Multiply by 75%. How much is he giving you? 20? 2400. So this will give you the goodwill here. Now here it will change. There was when they had 50% control, it's out. Then it ilibaki, then fair value ikakuja 900 at 80%. So this is it. You will just do it this way. It will be 50% of 300 plus 1300. You add the 80% ikiwa zote. Now this is 300. Just get the total. This was 950. Kitu kama hiyo. The fair value of original was 950. So this you multiply by the 950 alone. Let me just have it here. So how much is it giving you? This is 2100. Hapa itakupea ngapi? How much is it giving you? Yes? Huh? 1560. This should be 30%, not 20. The other addition, 15, 30. 30% of 950 plus all the 50% of all that. How much? Yes? Huh? 1085. If you less from there, what will be the goodwill? 1. So that is what will be the goodwill. Now the statement of comprehensive income, unajiuliza Soma Limited existed as a subsidiary for how many months? If it was acquired on 1st January 2021, here it exists during this year as a whole subsidiary. Sure. What about Jana? Jana started being a subsidiary from 1st of January 2024. So we'll only consolidate for how many months? 6 months. So we'll just do that. So first, I look for the depreciation on these 600. Depreciation will be of how much? Divide by 6. Itakuwa ya 100. Then also the intergroup balances, which is the intergroup sales on number 5. Intergroup sales were of how much? Intergroup sales, they were of how much? 340. We're told that they made a loss of how much? 55. Half of them remained. So our unrealized, this is not be profit, but will be a loss. You just take 55, you multiply by the R. This is 22 point. So instead of now, we need to eliminate that loss. Therefore, I will less it on the cost of what? Cost of sales. So having that now, we can consolidate. This is what we call the Pata what? To be Pata group consolidated statement of profit or loss. Statement of profit. This is or loss and other comprehensive income. This is for the year ended when? For the year ended should be 30th June 2024. So shillings are in million. So we begin from there. So I'll begin with the revenue. Revenue itakuwa ya ngapi? 7750. You add, this is 4260. This will be 2860. I'll multiply by 6/12 minus the intergroup balance of 340. How much is it giving you? So this will be 7750 plus 4260. And 866/12 minus 340. This is 13,100. We also have the cost of sales. Also do the same. Cost of sales here, it was 53.80. To add 2050. To add this is 14.80. Multiply by 6/12. Minus the 340. You minus the unrealized profit. And then the depreciation. To add to be equals to how much? The unrealized loss. So 380, 2050, 1480, 6/12. Then you minus 340, 22.5. Then you add 100. 7907.5. So we can have the gross profits. So the gross profit here was of how much? To be 13,100, you minus answer 5192. This is 0.5. Then from there, do we have other incomes? No. We have distribution costs. Distribution cost here should be given by 495 plus 290. 90 plus. This other one is 200, you multiply by 6/12. 495 plus 290. 200, 6/12. This gives us 885. At the main expense. The main expense here, it was 760 plus 650 plus this other one is 400 multiplied by 6/12. It will be 760, 650, 400, 6/12. This is 1610. Also minus the finance cost. Finance cost, it was 90 or 80, 60. 90 plus 80, 60, 6/12. So it will be 90, 80, 60, 6/12, which is 2490. So you can get the profit before tax. Profit before tax, 51, 2.5. Sorry, this should be 90 plus 80 plus 60. This should be 200. So this is 5192.5, 885, 1610, 200. This is 2497 point. Less the income tax expense. Income tax expense. Income tax expense is of how much? 340, 370 plus 220 multiplied by 6/12. We give you how much? 340 plus 370, 226 over 12. This is the 800 and what? And so what is the profit after tax? Profit after tax 2497.5 minus answer. This is 1667.5. From there we add share of what? Associate. What we mean is that for the past 6 months, this company was what? Jana. Here I didn't it. Jana and some. So Jana was an associate. You know. So I would just take 50% profit for the year. It was how much? 500 multiplied by 6 over. Give you how much? 120. So the total profit here is how much? Total profit plus 7.5. This is 1802.5. The other comprehensive income, other comprehensive income. Other comprehensive income is the gain in property revaluation. This was how much? 265 plus 80. Three, five. So total comprehensive income. Total comprehensive income. About 1802.5. This is 2147.5. That is how to do that. Now the key is here. When consolidating here, we only consolidate when it is a subsidiary. So you have to consider the time that it existed as a subsidiary. So if I was doing the statement of financial position, I will consolidate all of them, even the previous. Because it's at the end, they were all existing as a subsidiary. And remember, I said statement of financial position is never affected by the what? By the date. Pamoja. So ni kwa tu venye ziko statement of financial position. Naona venye zimekuwa rahisi. Ana. Saizi inafanyika. Yeah, even at the end of it, if goodwill inakushinda achana nayo. It's only 6 marks you are losing. The others you can be able to get them. Kiangalia kama hiyo ilikuwa inasema 14 marks. Out of 14 marks huwezi kosa 10. Sawa sawa. Right? Any question? We meet on Saturday. Saturday si tunafanya class ya mwisho. Ama you also want to meet next week?